Wall Street rebounds as indices start the week on a strong note. The S&P 500 moves out of correction territory, while the Dow sees its best day since June as the street looks ahead to the Fed policy due to be released on Wednesday. Stocks in the Asia-Pacific trade mixed ahead of the Bank of Japan's policy decision. The GIFT Nifty is implying a flat start for the Indian market. Crude prices slipped below $90 a barrel ahead of the key Fed policy decision. Gold, meanwhile, remains above $2,000 an ounce as geopolitical concerns over the Israel-Gaza war sustain. TVS Motor reports a strong set in the second quarter. Margin is at an all-time high, while the company also registers its highest ever quarterly EBITDA. For Marico, quarter 2 was a mild beat as revenue falls lower than expected, while profit and EBITDA beat expectations. And in key earnings today, capital goods major L&T is expected to report a 17% growth in revenue, while order inflow trends will also be key to track. Bharti Airtel is expected to show a 2% growth in ARPU along with a 1% subscriber growth in the second quarter, while a good set of numbers is also expected from Tata Consumer. Good morning. In the Mumbai News Center, I'm Sonal Bhutra. You're watching Power Breakfast. Those are the top headlines that we are tracking for you. Continues to be an earnings-heavy day as well, and we do have a lot of macro cues from the globe as well. So let's take that up and look at what the Asian markets are doing. They are largely lower ahead of the Bank of Japan policy meet, which starts today. It's a two-day meet. So the Hang Seng, which is down around 0.9%, but we do have Taiwanese index, which is up 0.2% right now. Elsewhere, China Purchasing Managers Index data for October came in at 49.5 versus a Reuters poll of 50.2. A PMI reading below 50 indicates a contraction, so that is something that we should watch out for, on the back of which we are seeing Shanghai also in the red right now. Nikkei too is lower by 0.2%, so across the board there is some pressure in Asian markets. And GIFT Nifty, that will come up for you on the screen because that one is indicating an implied open which could be absolutely flat with some negative bias. It's a 2-point cut that the GIFT Nifty is indicating right now. We did see a massive recovery from the lows yesterday. Let's see which way things go today for our own markets. With that, let's do one thing. We will move on now and stay with the Asian markets as the Bank of Japan's key monetary policy decision is due today. Let's listen into HSBC's Frederick Newman as he gives his take on what is expected from the central bank later today.
So BOJ clearly in play for this meeting today. I think the consensus among economists was no move, but we see the market kind of expecting something to happen today. Maybe the BOJ is gearing up to tweaking its YCC, and of course that is partly because of external pressure, because U.S. yields are rising. At some point BOJ has to say, well, we need to do something here to anchor the yen. And note that they refrained from intervening in the Japanese yen over recent weeks. People wondered, why are you not intervening? You did it last year. Well, maybe it's because they knew this decision was coming today. So certainly in play, even though we had expected no change until next year.
Okay, all right, BOJ decision today, and that will be key to watch as well. But in the U.S. markets, Wall Street ended Monday's trading session higher. The Dow clocked in gains of over 500 points. The S&P 500 closed 1.2% higher, and the Nasdaq rose over 1%. CNBC's Bertha Coombs gets us a wrap of all the action on Wall Street.
U.S. markets rallying to start the week. Major averages up across the board as investors gear up for another big week of earnings, a Fed rate decision midweek, and the October jobs report on Friday. The Dow up 511 points. The S&P 500 added 49, while the tech-heavy Nasdaq gained 146 points. Fresh off a deal with Stellantis, United Auto Workers have reached a tentative agreement with General Motors after striking for more than 6 weeks. GM is now the last Detroit automaker to reach a deal with the union after Ford reached one last Wednesday and Stellantis on Saturday. The potential deal has yet to be ratified, but it is set to include a 25% wage increase, similar to what we saw with Ford. President Biden has issued an executive order that will impose national rules on the fast-growing artificial intelligence sector. The president is seeking to use federal agencies to monitor the risks of AI and develop new uses for the technology while still protecting workers' jobs. The order would streamline high-skilled immigration, create new government offices and task forces, and open the door for the use of more AI in government. That's what's happening here in the U.S. Back over to you in Mumbai.
Okay, all right. That's all the update that we have from the US markets. In fact, let's also listen into important opinion coming in from experts as they speak on the US economy, inflation, and the Fed's decision that is due later this week.
We fully think things will slow down in the fourth quarter. That said, we might be slightly more optimistic than most. From the beginning of this rate hiking cycle, we have said the U.S. is not going into recession. So when everyone was having the debate hard landing versus soft landing, we never thought it was going to be a hard landing. And so maybe we're just a little bit more comfortable saying things have to slow down, but probably not crash. Clearly, inflation has come down, and it's come down a lot faster than where their own forecasts have been. So in their forecasts at the June FOMC meeting, at their forecasts at the September FOMC meeting, they had forecasts for inflation for this year that were 3.7, 3.9% for core inflation. There's just no way we're going to get those sorts of outturns with the data, and we think we're going to undershoot.
The Fed is certainly not going to do anything on Wednesday. And they're going to leave the door open. I think it's they're going to just say the evolving data. We still have 6 more weeks until the next meeting. There's no dots this meeting, so we don't know, exactly what all the FOMC members are going to be thinking. But it's basically going to be a leave the door open. So I don't know if we're going to get all that much extra information as far as that's concerned.
The market's right. There's not going to be a move this week, but it's going to be a very, very active debate, I think, around 2 things. One is at this stage, do they need to go further? There'll be those that say, the old models don't work anymore. We obviously are winning the battle against inflation, and the 10-year Treasury is doing some of our work, so we can just really think we're done. There'll be another set, which I think will win out, which will say it's probably too early to declare victory completely, keep the door open for a December move. And I think there'll be quite a bit of debate around what to signal. And at the end of the day, I expect the wisdom of the room will be we should keep the door open for a December hike, not knowing what the data is going to be between now and then.
I do think we'll have a year-end rally. And I was thinking 4,600 by year-end, which is where we were back in the summer. I think maybe we'll get to 4,400. Well, I think the market is going to be focusing on the Treasury refunding announcement, how much will be in the various kind of securities. That's what the bond market is concerned about. And these days, the stock market has to be concerned about what the bond market's concerned about. So that's where we are at this point.
Okay, all right. It's time to get to the final update on our global market wrap this morning. European equities ended Monday's trading session higher, with the French CAC up about 30 points, the German DAX gaining 29 points, and the British FTSE closing 36 points higher. In important macro cues from the region, the German economy contracted slightly in the third quarter. Germany's GDP declined by 0.1%, which is better than the 0.3% decline forecasted. Europe's largest bank, HSBC, reported a 235% jump in profits in the third quarter, lower than street expectations. The bank also announced an additional share buyback of up to $3 billion. Shares of Siemens Energy, meanwhile, surged over 12% after the chair of the troubled firm clarified that the company does not need money from the German state. Okay, all right. On that note, we'll slip into a short break. When we come back, we'll tell you how these overnight cues impact our own markets in our Power Prep segment, so stay tuned for that.
What does your investment?
Welcome back. Here, still tuned in to Power Breakfast here on CNBC TV18. We now have our research team joining in with what the trade setup looks like, the stocks that are likely to be in the news, and the action from the F&O space as well. Hey guys, a very good morning to all of you. Rima, let me come across to you first up. There's been a recovery in last 2 trading sessions, but what is today looking like?
Well, today could be a better session. In fact, the, bulls are trying to, claw back some kind of, they hold on the market. So Friday was a good session for our markets. Yesterday, if you remember, we started off lower due to the global jitters. But in the first 1-2 hours, only markets climbed up, and then it was a steady session. And finally, the Nifty recovered 200 points from the day's low to close at that 19,140 mark. The resistance from here on will be seen around 19,250, 19,300, which has acted as a big support as the markets were falling. So we had held on to these levels for quite a while, and now this 19,300 will act as a bit of a resistance on the way up. Global markets are fairly upbeat, as you pointed out. US markets ending with gains of 1 to 1.5%. Crude prices have declined further to $88 per barrel on easing fears of a wider Middle East conflict. The big cues today will be earnings from Bharti, L&T, Tata Consumer, and there are many in outside of the Nifty. The big Fed decision is tomorrow. In terms of flows, we had the DII's net buying 1,328 crore, while the FI's net sold 1,761 crore. But the focus is going to be on individual stocks. But broadly, it looks like the markets could try and climb and cover some more ground on the way up. Back to you.
Okay, all right. So that's what the GIFT Nifty is implying as well. Thank you, Rima, for all those cues. But a lot of stocks that will be on our radar as well. Surbi is joining us with that list. Hey, Surbi, good morning.
Good morning. So I have a few earnings on my list today. The first one, Marigo. It was a mild beat when compared to the poll. The revenues came in at 2476 crores, EBITDA at 497 crores, and margins at 20.1%. APL Apollo pretty much in line set of numbers. Revenue at 4630 crores, EBITDA at 325 crores, and PAT at 208 crores. TVS Motors, it was a strong set of numbers. Revenues up 13%, EBITDA up 22%, and margins at 11%. Blue Star, strong set of numbers. Revenue up 20%, EBITDA up 43%, and PAT up 66%. DLF, it was a decent set. It was the highest ever collections at 2359 crores. The surplus cash flows was highest ever at 1147 crores, and it was a net cash positive quarter at 142 crores. Castrol for Q3 of calendar 2023, revenues were up 6%, EBITDA was up 4%, and margins at 23%. We'll also be tracking Butterfly, Gandhimati, and Crompton, as this is in regards with the scheme of amalgamation with Butterfly. They did not receive an approval of majority public shareholders of Butterfly, and which is why the scheme will not be acted upon. There'll be some other companies on our radar which may react on the back of earnings, which is GMR Airports, Gokuldas Exports, and Spandana Spurti.
Okay, that is a long list. That's been the case nowadays. Thank you, Surbi, for joining us. But let's talk about the action from the F&O space. Nigel is joining us now. Hey, Nigel, morning.
Well, morning, Sonal. Yesterday we ended in the green, but the problem was the broader markets were actually underperforming. And as we had mentioned earlier as well, the gains yesterday were skewed because of HDFC Bank as well as Reliance Industries. So today you'll want the breadth of the market at least to catch up, because otherwise portfolios don't feel so good. What do the FIs do? Well, we were talking about them being net short, and that's not such a bad thing. I'll tell you what, we have bumped up close to around 300 points, and they haven't covered any shorts. So the short position continues at around 1.55 lakh contracts on the short side, and in percentage terms, it's close to around 88%. Pull up a couple of active strikes. Then yesterday, the 19,000 put, but that was fairly active. The premium ended at around 34 rupees, but it started the day closer at around 75 rupees approximately. So there were some signs of writing out there. You plug in that number, 19,000 put getting written. The lows of the last two sessions are closer to around 18,920, 18,930 odd. So 18,900, that becomes the first level of support. Resistance, well, you look at 19,250 to 19,300. I'll tell you what, I think the bears are going to fight to defend that level. The recent low as well, that becomes another line in the sand out there. The Nifty Bank, that's been coming back in style. And yesterday as well, it popped up big time from the day's low. Now it's hovering around the 200 EMA, and you'll want it to cross that mark. Try to make its way back to around 44,000 odd mark. Today, we'll have to keep an eye on the Nifty Financial Services Index, because that's what plays out the weekly expiry. So the Nifty Bank as well as the Nifty Financial Services will be in focus. For starters, I think we start off in the green, but we need to build on from here. And in that context, today's session is very, very crucial, because volumes have been lagging. In fact, the start is going to be more or less flattish. Volumes have been lagging, but in fact, we are up close to 300 points. So let's see whether or not the bulls can build on to this and in fact take us towards the resistance zone of 19,250. Back to you.
Okay, all right. Thank you so much for joining us, Nigel, Surbi, and Rima, and prepping us up for this trading day ahead. Up next, we'll get you all the cues from the commodity markets. But as we slip into a break, here's some exciting news. You can now find CNBC TV18 on WhatsApp, the best of market, business, economy, and global news truly at your fingertips. You can add the CNBC TV18 channel on WhatsApp by following a few simple steps. Firstly, make sure you have the latest version of WhatsApp. Go to the App Store or Play Store to make sure your WhatsApp is updated. Then go to Updates. You will find a button for channels. Search for CNBC TV18 and hit subscribe. You will get all the necessary updates right on your WhatsApp feed. You can also catch CNBC TV18 on all other social media platforms, including Facebook, X, Threads, Instagram, YouTube, and JioCinema.
This Diwali New Hawkins.
Welcome back. It's time to get to the latest on the Israel-Hamas war. The Israel Defense Forces have expanded their military offensive in Gaza and claim to have struck 600 targets over the last 24 hours. Israel also has raided the Jenin refuge camp in West Bank and arrested over 50 people, including 38 Hamas operatives. Hamas also released a video showing 3 women captured during its October 7 attack. The outfit has captured around 240 people and have said that they will release them in return for thousands of Palestinian prisoners held by Israel. The Israeli Prime Minister responded to the video and termed it to be cruel psychological propaganda. Netanyahu also reassured the hostages that the Israel government will bring them home. Meanwhile, the Gaza Health Ministry claims that the death toll among Palestinians in the war has crossed 8,300, with about half of them being children. In Israel, the death toll is more than 1,400. Okay, all right. With that, let's move on and talk about the commodity space. Manisha Gupta is joining us with all the update. Hey, Manisha, good morning.
Morning, Sonal. Thank you for that. I'll start with the crude oil prices, where we saw prices decline 3% overnight. This is ahead of the monetary policy meeting from the U.S., Bank of Japan, and Bank of England as well. Well, the markets also saw pressure because of the China manufacturing numbers that came in at 49.5 for the month of October. This is versus 50.2 in the month of September. Also, the China services growth at 10-month lows is weighing on to many of these industrial commodities. You know, the most interesting clearly has been the World Bank report, which says that for the current quarter, you will see the global oil prices averaging $90, and next year it could be 81 or 157, depending on how the oil supplies are and where the conflicts really head. For the metals as a sector, it also has been a good last 24 hours. You have zinc prices trading at a 1-month high. Silver is trading at a 2-month highs. Iron ore prices continue to surge, trading at a 120. That's a 1-month highs as well. And copper prices also trading at a 1-month highs. So while the energy markets have seen a decline, it is the base metal prices clearly shining bright.
Okay, all right. Thank you so much, Manisha, for joining us. So that's what's happening in the commodity space. Quickly taking a look at what is happening in the Asian markets yet again, because we are seeing some sort of pressure coming in. This is ahead of the Bank of Japan's decision. We do have Chinese macro data which has come by, which is lower than what the street was working with. So Hang Seng has extended those losses that we've been seeing, 0.8% lower there. Taiwanese index, though, managing to be in the green right now. But across the board, be it Nikkei, be it Shanghai, be it Kospi, most of these markets are in the red right now. And the GIFT Nifty is indicating that the start for our own markets could be flat. It's absolutely flat with some negative bias. It's down 6 points as we speak. So let's see whether we continue the recovery that we've seen in the last 2 trading sessions, 200 points off the lows on the Nifty, or we see some pressure as we've been seeing in the global markets. With that, we'll take your leave on this edition of Power Breakfast. Stay tuned. Bazaar Morning Call comes up next.